Hi guys, welcome to today's post-market analysis and price action analysis for the 4th of December 2022. And I know it's been late to upload the video today. Actually today there was a lot of disturbance outside and also there was some power failure. So because of that I could not record this video earlier. Anyway, so let's get to the topic now. As I mentioned yesterday, we had a wide CPR today. So let's get to showing you the wide CPR. This was the CPR and see how wide the CPR is. So whenever there's a wide CPR, most often expect a sideways day. So in Bank Nifty, the first hour high was here, and after the first hour high was made, it kept trading in that range. So this was the first hour high and low, and that was the range that it took the entire day, and that was expected. The second candle broke this level here that we had marked yesterday. It was a strong candle. Then this candle broke the level again that we had marked yesterday. That was the level of 36741.10, and the level that the second candle broke was 36550.75. so you can see the size of those candles. They are big candles, large candles, both of these, and these are the candles that break resistances. And then price came to the R1 pivot. This was the R1 pivot. You can see here R1, you can see on top here it is R2, and this here is the previous day high. So initially look at these wicks here. So price was taking support in the first two candles at the previous day high. The opening candle was a doji, and then at the level of around 36,900, price reversed after going up from here, and it reversed and then it crashed down, and then again it took a swing here. So this was the swing, the second swing low. The first swing low was here, and then it again came down, made a low here, and then from there it went up again. So it was a sideways range bound day today. Well, typically if this candle here had been a strong bullish candle, I would have expected this candles the price to retrace back to the candle low here, and then at this zone I would have seen what kind of price action it made. This candle here did give an indication that the price was going to bounce because it was a strong pin bar, but this candle, that was the days 1, 2, 3, 4 and 5th candle, was a very strong red candle which had broken the previous day support of the first candle. The closing of the red candle was not below the, let me clear this, the low of the first candle. Had there been a convincing close below the low of the first candle, then there would have been a short entry at this low, and then you could have taken your profit at the CPR. But that was not possible. I was not looking for a breakout trade anyway. You can check out that strategy that I've already made. I was not looking for a breakout trade simply because CPR had already indicated me even before the market opened that it was going to be most likely a sideways day. So whenever there's a higher probability or a possibility of a sideways day, I don't look for breakout trades at all, and most often when CPR is wide, breakouts fail. Let's take a look at Nifty now. Nifty opened with this doji here. This kind of a doji, which is a red candle, suggests that the market is not really in anybody's control, neither in the control of the bears nor in the control of the bulls, but it is the sign of a good trader to not have any bias on any particular day. So you should not have any bias like as if today is going to be a bearish day or today is going to be a bullish day or anything. You just have to have an idea, and you just have to understand that the CPR again being this wide here gives us the idea, a very strong indication that it is going to be a sideways day. At this level, price made this candle, and then look at the rally here. Massive. Look at the size of these candles. The red candles are absolutely non-existent in that rally. And here when price came to this level here and price had reversed at this level, this was the previous swing high and the high of the first 1 hour and this was the low of the first 1 hour, right? And here when the price makes this kind of a high and low, which is very wide, then at such points usually the price will tend to range between these 2 points. So the price will tend to range between this high and this low here. So you can usually safely say that you can take trades based on such patterns, but I was not very sure, and it's anyway not the kind of patterns that I trade on. This is a totally supply demand concept in which you see that there is a bounce from this candle here, and then price had reversed from this red candle here, and then when price goes and reaches back to the top of that candle, who are sitting here? There are sellers sitting here. Okay, so there are sellers sitting here, and sellers have pushed the price back to this level, and then buyers have pushed the price from around this zone here, and then buyers have come in control, isn't it? So when buyers come in control at this level, sellers come in control at this level up here. So this is the level where sellers are sitting. So when price, let me just clear this. Yeah, when price made this kind of a red candle, this was a strong red candle which suggested to me that the level was going to hold. Somehow I thought at that time that the level was going to hold, and since this was the high, it had broken that high, but no candle had convincingly broken it. So see, this candle had barely broken it, and this candle, then it made this red candle again, and then this candle was formed, which again was not a very strong candle. It had the wicks here, so it didn't look like a breakout candle, and then this candle was formed here. So after this red candle was formed, if you trade based on supply demand concept, then this was an entry point for you where you could have shorted this candle here, and at this level you could have taken an entry here, and then you could have kept your SL on top above this candle, give a little room and keep this SL here, and then you could have taken your profit exactly at the level where the close of this red candle here was there. So you can take your profit at there, you can book profit at this level. So that was one possible entry in Nifty today, but since that is not one of my techniques to trade, or it doesn't fit into my rules, it being a wide CPR day, I usually wait for the reversal strategy that I have discussed with you in the past. So please go and check that video also. So on such wide days, where would my entry have been? Had this been a good green kind of a candle, it had to be a green candle, and then had price reversed to this level only up to the low of this candle, and then had it reversed and made this kind of a candle here, a green candle, then there was a probability of taking a long trade there and taking profit back to wherever price had reversed. This is the strategy that I've discussed in the reversal strategy video. As far as purely supply demand zones go, then you can think about deploying these strategies on days like these, where you mark out this high, and then whenever you see a candle like this that is formed at the high of that range, you can place a short entry, but ensure that you take profit immediately at the previous swing low and not wait for price to fall further, because such days price is going to keep going sideways, up and down, and there is not going to be a real trend per se to take any entries on. I will definitely post the important levels for you on Telegram and on Twitter also. Please like it and subscribe to my channel if you haven't already, and also please share my videos with your friends and family and colleagues. Thank you so much for watching, and have a nice day, and I'll see you in the next video.